just a couple of observations is that there is a capex cycle going on that's raising GDP and government spending, but domestic ordinary businesses in the US are struggling because rates have been high. And so you've got this bifurcation, the domestic versus the internationals kind of thing, as you said. And that's caught a lot of people offsides as just misunderstanding that whole process, when in fact liquidity explains what between 90 and 97% of pretty much everything. You have one macro factor. I've always said that it's the greatest and easiest macro risk-taking environment of all time because you have one macro variable that matters and nothing else really counts.
In this video, Raoul will talk about Bitcoin, crypto trends, and future wealth. Let's catch him.
I wrote about this on X recently. I'm like, it's amazing because I went and searched via Grok or whatever to go and find any use of the word debasement by any media. There was none. Yep. And what's also incredible about the whole debasement trade, it was a bunch of fucking crypto people who figured it out well before everybody else. The gold people had kind of got confused with inflation because they were very stuck in the 70s idea. And it's the crypto people who figured this all out before everybody else. And finally, people are starting to realize that this is the thing. And so I think, as you say, it's still early because I still have to explain it to everybody. And by the time we even get to next cycle, I think it becomes the all-in, everybody knows what the game is.
Yeah, I think you're right. And, we started out by discussing the business cycle and where we are in the business cycle. If you look at the best forward-looking evidence for labor, for example, temporary hiring, of course, you do not hire people permanently when you think the outlook is slightly muddy still, which is, for sure still the base case at sea level. But we're starting to see, a mild acceleration in the temporary hiring while we don't see the hiring elsewhere. And that's the first clue of every acceleration of the hiring cycle. So I think in a couple of quarters from now, we'll probably start talking about scarcity in various sectors again, and from an employment perspective, also given what's going on with the labor force, right? So my biggest bet actually right now is that the capex cycle that we see in data centers, AI, etc., will spill over to a massive capex cycle in automation. And those two themes are obviously interlinked.
The kind of robotics idea that everybody gets efficient in manufacturing.
Exactly. So look at it this way: if you see a decline in the foreign-born labor force as we do right now, and you send a lot of low-skilled workers home, if you're a farmer, if you're a warehouser, if you're in logistics, etc., you simply need to spend now to be on top of this. And ultimately, you're more into this than me. I don't think it's out of this world to think about a humanoid robot controlled via AR in India. So you can still hire, but not in the US. And I guess that's kind of what the administration is trying to incentivize early here. So I think it was really, really interesting when I did a study. And typically I hate looking, 5-10 decades back for comparisons because nothing is kind of like that anymore. But I had a look at the last time we had tariffs implemented in size. And what happened in the aftermath of that was actually a huge capex cycle, because by implementing
the 50s,
yeah, 50s, and then you had an implementation of tariffs just around the 1890s as well. So you have a couple of empirical studies, and both led to capex, because you simply force the local manufacturers to do capex, even though they don't want to. Especially if you shrink the labor force at the same time.
Bitcoin's flash crash to $103,000 sent shockwaves across the market, triggering over $5.39 billion in liquidations, the largest single-day wipeout in crypto history. Yet, despite the intense volatility, several key charts suggest the broader uptrend remains intact. In fact, when viewed from a wider perspective, Bitcoin's recent drop is less severe than past corrections that led to significant rebounds. Historically, Bitcoin has weathered far sharper declines. On the weekly chart, the current drop of less than 10% pales in comparison to previous pullbacks in March 2025 and July 2024, which saw losses of 14 to 15%, both followed by strong rallies. Crucially, BTC continues to trade within its long-term ascending channel, a bullish formation that has guided price action since mid-2023. Holding above the 20-week moving average, currently around $111,000, could signal the end of this correction phase, mirroring capitulation patterns seen during the COVID-19 crash and FTX bottom. Meanwhile, medium-sized Bitcoin holders, often referred to as sharks, have aggressively bought the dip. According to Glassnode, the shark net position change hit its highest level since 2012, as well as holding between 100 and 1,000 BTC added significantly to their positions. This accumulation shows growing confidence among seasoned investors, in contrast to the panic selling by over-leveraged traders.
It's always been my impression that the global central banks completely understand what they're doing. Japan is always the leader in this for some because of its population's older, I guess. And there's signal in what they're doing, which is saying they've all seemed to have gone away from using traditional methods to just going straight to the private sector and using the banking system. And Japan is doing the same thing by readjusting its yield curve.
Yeah, it is. And at the same time, we're obviously seeing this global trends towards removing red tape, removing capital restrictions, etc., for private banks, again, incentivizing them to do the heavy lifting on this liquidity creation. And I think that's essentially what a lot of people have missed over the past couple of years, that we've seen a move from central banks doing the heavy lifting themselves to instead incentivizing the private system to do it instead.
Why did they do it?
At least my initial thesis was that, they were scared in the aftermath of that inflation spike in 2022 into asking someone else to do the dirty job.
They can't be hung for it. So it's like, well, we're not doing it.
Therefore, they've incentivized the private system to do it instead. And I think that makes, for as long as we're running inflation above their target range, that's probably how they're going to maneuver this.
Oh, so their messaging looks consistent. It's like, we're not adding liquidity because we understand inflation. Meanwhile, they're like, hey, you guys over there, buy as many of these bonds as possible and create more credit on the back of it.
Bitcoin hovered around $111,000 on Saturday, still reeling from a historic $20 billion liquidation cascade that rocked the crypto market. Despite the scale of the wipeout, traders warn that the bottom may not be in yet, as bearish sentiment continued to grow. Data showed BTC USD unable to mount a meaningful recovery from its 3-week lows, fueling concerns of a deeper correction. Fresh macroeconomic fears, including renewed tensions from the US-China trade war, added pressure to risk assets, with traditional markets sliding and gold rallying above $4,000 per ounce. The impact on Bitcoin's technicals was immediate. The 4-hour Relative Strength Index, RSI, plunged to deeply oversold levels not seen since early 2025, raising the possibility of a short-term bounce, but traders remain cautious. Analyst Skew noted widespreads and limited liquidity across exchanges, suggesting that market makers were still assessing the fallout. Passive buying was spotted, particularly on Coinbase, but the market remained fragile. Trader Roman echoed growing skepticism, stating that this was not yet the cycle's bottom. He called the event the beginning of a much-needed crypto cleanse, citing excessive speculation and the 700% run-up in Bitcoin since its macro low. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.